In the first 7 months of 2021, returns on Sri Lankan stocks have outpaced most asset classes. The all-share index was up by 19.5% in 2021, and the S&P index, tracking the 20 most liquid stocks, was up by 15.3%. Colombo Stock Exchange Chief Executive Rajeeva Bandaranaike joined Echelon to discuss developments in the capital market and why stocks have emerged as a top asset class.
In terms of performance, I think the stock market did quite well despite the challenges of the pandemic, both in 2020 and 2021. We, in fact, had an initial setback when we had the first lockdown and the market crashed, both indices. And I think the all-share price index dropped by something like 25%. And S&P, I think, dropped by about 33%. But the indices recovered. They recovered very sharply, and in fact, post-lockdown grew by 48% of the all-share, and the S&P SL20 grew by about 35%. And this year, again, both indices are in positive territory. So in terms of the price performance, the market has held well. Even in terms of volumes, I mean, we have seen some significant volumes coming into the market in 2020 and 2021, despite the pandemic. Of course, there are many reasons for that. Even if you look at the number of transactions, we were averaging something like 5,000 a day up to about 2019, and this doubled in 2020, and we are five-fold increase today at about something between 22,000 to 25,000 trades a day. So across the board, we have seen increase in volumes, increase in investor participation, and also the market in indices and the prices in positive territory. So that's where we are at the moment.
You are the chief executive of the stock exchange. You do not necessarily foretell what will happen in the future with the market. But having said that, Rajeev, what do you think will be the forces that will impact how the market performs in the next 1 or 2 years, do you think?
So let's look at some of the factors. I mean, we have seen some record-breaking profitability among the corporates. Even though the pandemic has set in, we have seen that corporates have faced up to the challenges very well, evolved, and come on top, as it were, literally. And we have seen, for example, the highest ever quarterly profits, on a consolidated basis being reported in the last quarter. We have seen a 5% growth in the annual company earnings last year. We have seen a widening of the investor base. In fact, there is a 70% increase in the number of new investor registrations. So attractive returns coupled with higher volumes. We have fairly high dividend yield, 2.6% currently. So higher profitability among companies, lower valuations make it attractive. One of the key reasons for this kind of sustained interest is the low interest rate environment, which has brought in a lot of domestic investors into the market for want of better and alternate options. I think we are the direct beneficiary of that low interest rate environment. That has pushed a lot of high net worth investors as well as retail investors into the market, and that has fueled this run, as it were, basically. And we have seen both indices and volumes on the back of it, and new investors also entering the market as a result. So I think coupled with investor-friendly regulatory regime would further propel the market. For example, if you look at taxes, we don't have capital gains, no stamp duty, no dividends, no tax on dividends. And on the regulator side, we have compliance with international accounting standards, we have corporate governance rules in place, a corporate disclosure policy, and of course the ease and entry of exit, both for foreign and local. So I think if you look at holistically, if you look at all of that, coupled with even the liquidity, because since the market is more liquid now, it makes it all the more easy to enter and exit without impacting price too much, unlike earlier in an illiquid market. So when you look at it holistically, I would think we have quite a positive outlook for the next 1 year.
What is the outlook, you think, for new listings and capital raising, further capital raising?
There is now a demand for equity capital, and companies are starting to look at the capital market again for IPOs. We know that we had some very good IPOs very recently, and all of them were oversubscribed. So far this year, I think over 5 billion have been raised in equity capital alone. And if you look at the totality of rights issues and IPOs, there's a total of over 66 billion that has been raised, surpassing the entirety of last year, which there was about 60 billion raised in the market. So in 5 months, we have covered all of what capital that was raised last year. So there is a definite momentum in the shift of companies coming into capital markets. I think one of the key reasons, again, I go back to valuations. I think the valuations are now attractive enough for issuers to look at the capital market. Earlier, they were not able to get the price that they wanted. And I think that's one of the key factors, even if you talk to investment banker. So right now, I think it makes it attractive for issuers to look at the capital market. But we did also something very quickly when we realized that there was potential in the primary market for the primary market to get reactivated. We did 3 things. One is that we have expanded our listing criteria to enable more companies to list. So we expanded on the traditional criteria of only looking at profitability. So apart from profits and net assets, now a company can look at their revenue and size. They can also look at positive operating cash flows and select one of those criteria to be eligible to list. So we have widened the listing criteria, enabling a larger segment of companies really to come in. Then we also created a separate board for SMA companies, again with different kind of listing criteria. And we are also working on a multi-currency listings, both for foreign companies as well as local companies wanted to raise dollar-denominated debt. And the second thing that we did was we completely revamped the listing approval process. We worked very closely with the Securities and Exchange Commission, and we eliminated the dual approval process for listings. So it's a one-window concept, and making it the process easier and very much faster for companies. In fact, the first IPO that we had this year, the listing application was approved in just 3 weeks. So we have ramped up the process. And thirdly, we have also revamped and set up what we call a new issuer relations unit that will canvass and promote new listings.
So Rajeeva, in particularly in the US, we have come to see this phenomenon that they call special purpose acquisition vehicles, right?
Yeah.
With the regulatory changes that you have done to make it easier for companies to enter the market, do you think an instrument such as a special purpose acquisition vehicle may be useful or may be possible in the Sri Lankan context?
Securities and Exchange Commission has already done some preliminary work in that direction. In fact, they have written to us and we have done our own research for SPACs, and we are preparing a policy document on how we can enable SPACs in Sri Lanka. It's something that we have to tread cautiously. There are the risks involved in SPACs, in the introduction of SPACs, but it's a very forward-looking piece of a product that we can bring in. And so both the exchange and the SEC has already started doing work on it. We've done a fair bit of work, and we probably will be going in for public consultation soon on the rules and the regulatory framework. So that's something that we're certainly looking at.
Rajeeva Bandaranaike, thank you very much for joining Echelon.